The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off. Another exciting day of trading. You have markets accelerating lower in the overnight session. We've bounced dramatically, but markets still in the red. S&P's right now off 132 points. That's 2.6% in the red. So much for the 5,000s. 4,900 handle on the S&P's. 49.75 off 135 points. NASDAQ 100, you were all the way down at 16,460 right after the open last night. We're trading down 481 points or 2.8%, 17,065. Dow was down at 36,708. We're at 37,610. You're 900 points up in the Dow, and we're still down 900 points, though. These markets, relentless right now, but volatility persisting. Russell, negative by 62 points or 3.4%, 1776 on the Russell. Now, you talk about some fear in the overnight session. We got quite a spike in the VIX to 60.13. We've backed off a bit. We're still above where we were on Friday action. You're trading right now at 48.67 in the VIX. You take a look at this thing, and yeah, we got a real spike, man. We spiked to over 60 overnight. That August 5th was the yen unwind trade, if you remember. Yen unwind trade, going back to 65.73. We hit 60. The last 3 days, from 25 to 60, we've paired those gains a bit. We talk yields. Right at about 4% right now. Let's see, 4.04. Okay, you were all the way up to a 114 handle in the futures last night. We've backed off a bit. We're at 112.27. You have the 10-year at 4.04%. You have the dollar flirting with 103, 102.95. You were approaching 102 last night. That's up from the lows of 101.26 on Thursday. So interesting to see what's happening whether you look at the dollar, you look at yields. Okay, market, yeah, we're catching a little bit of a bid today, but nothing like what's happening in the dollar. In terms of the dollars trading at 103, on Monday we were at 103.84. Okay, we had the reciprocal day on Wednesday. We're not that far off on the dollar from where we were prior to the market rout occurring Wednesday, Thursday, Friday. Yields, a little bit of a different scenario, right? We came into that announcement almost a point and some lower, but you can see kind of the reverberation. We're actually not that far off on yields from where we were on Wednesday night as well. But equities, it's a different story. Okay, equities, whether you talk about where we were at the high, where we were on the low, we've given up 10, 12% almost on equities just from where we were on Wednesday night, and that's not cherry picking the highs that we were at of 61, 66. Now, it said something that Tiger Stan sent it out for Market Insights today, last night, and maybe this is going to be one of them. There's going to be rip-roaring, rip-your-face-off types of rallies in this market. Okay, it's going to happen. What's remarkable is, when we're talking about last night, you're down from 22.3 to 16.4. Okay, that's from February 18th to the low we got last night. You're talking about 6-7 weeks of trading action. 22.3 to 16.4. So you're talking about, almost 6,000 points, okay, about 5,900 points and change. To get an acceleration back to those levels, you're talking about almost 35% up. So when you see these types of rallies, and we'll see where volume comes in, all right? We're going to go over price and volume right now. That's what's driving this market. How about that volume on Friday? All right, now we'll see what happens today. Yeah, today could be a reversal. We're getting a rejection of lower price. Yet I encourage you to take heed of the fact that we're 20 minutes away from the opening bell, and we have markets off 2.8%. Continuing the decline we had on Friday with rapid volume everywhere in this market, and we have a VIX sitting at 48. Okay, the VIX sitting at 48, you're dealing with, one standard deviation moves that almost bring us to 5-7% limit down, circuit breaker type levels. So we're going to get some volatility, but remarkable when you look at that, right? From where we were just February 18th, you're talking about the NASDAQ 100 needing to rise about 35%. Yeah, that'd be 7 days of 5% from these levels, but as we know, and that's where it goes. You know, if you're in a portfolio, you lose 50% of your value, you got to make 100% to get it back, right? The percentages that we are down in this market are based off a price of 22,000. The percentages we're going up are now based on 16.5 or 17,000. Just one thing to consider as we go forward. And you got carnage everywhere in this market, no matter where you look, but Tesla, yeah, down another $15 in the pre-market. You hit 208. What's remarkable is Tesla gives back everything from pre-market. You're back to October 23rd prices. That level was sitting at a low of 212.11. Okay, 212.11. Keep that one on your chart because you break below there. You know, 138 is not outlandish for Tesla. I know we got a lot of Tesla bulls out there. But as I just mentioned, 212 is the number, and we hit 208, right? So you're breaking into that level on Tesla shares. All right, we get the banks coming out with their numbers later this week. We kick things off the earnings season on Friday, and it's not stopping today, man. JP Morgan, down another $8 in the pre-market. Bank of America, down about $1 to $33. You jump over to Citi, trading from $58 to about $57, $55 on Citi. Now we jump to some of the airlines. Okay, Delta, down about $2 in the pre-market right now. United shares, trading off about $2 as well. Jump to JetBlue. And boy, JetBlue, I was watching Bloomberg earlier this morning. They get an upgrade. I said, JetBlue's got an upgrade. What's going on here? I guess it could be a Max Payne situation, and they don't think that bankruptcy's in the cards. Well, if that's the case, I guess. But boy, you look at that volume on JetBlue, right? Maybe 342 is the area. Last week, we hit a low of 362 on dramatic volume. All right, you jump back to the S&Ps as we're bouncing from the lows here. That's a weekly. Let's put it on a daily. It's a textbook chart, literally from the textbook, folks, okay, that you're talking about quality volume to the downside, right? You get an escalation of volume right until March 11th. You get a slight reprieve in the markets. Now remember, March 11th brought us down to a price point of 55.34. You bounce all the way up to 58.37. Talking about 300-point bounce in the S&Ps when 300 points used to mean something. I joke, as in today 300 points is going to move like it's nothing, okay? But at that time, we didn't quite have the volatility. Over a period of, what do we got? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days of declining volume, trading days that is, right? 11 days of declining volume, and you rise higher, and then boom. Look at the volume escalation. Every single day, what do we have? One reprieve, and that was actually on up day. Where's the only day that you got a little lightness? On these two, right? And then boom. We'll see what today holds. Today's going to be an important day on a technical basis. And on the S&Ps, folks, you almost did a 1 to 1.618 expansion. Would have brought us down to 47.71. We hit 48.32 in the overnight session, but you can't deny the type of volume we got on Friday. NASDAQ 100, pretty similar action, right? We do 1.1 million contracts in the NASDAQ 100. And yeah, we'll come back, folks. We're going to talk some more price and volume. We'll take a look at indices. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. NASDAQ 100 off by 2.8%. And yeah, you take a look at this market on a daily basis. No denying we have price and volume to the downside, folks. We'll see what we get today. Okay, you could get a rejection. We already do have a rejection of the prices overnight, but you're still kicking things off down about 3%, folks. And we haven't even started trading for the week. And what's difficult on this is, the conversation, right? What I understand is we want to bring jobs back, okay? Can someone explain to me, I love it in the den because everyone's talking about, okay, that you bring the jobs back, right? We went through a global unification phase and people disagree. Maybe it hurt some of the people that were in factories, etc. So please somebody explain to me what happens if we're making all of our TVs, we're making all of our iPhones, we're making all of our clothing and electronics in America with American wages. And that's what's happening right now. You can argue that everything being said doesn't matter and is meaningless because the goal has nothing to do with reciprocal tariffs, which aren't even in place, okay? But how does that work? And at the same time that we're supposedly bringing all these jobs back for manufacturing, you have more and more factory automation taking place, right? Whether it's car plants, whether it's electronics. So I wonder how that whole conversation takes place in terms of what prices are going to be, whether you're talking about iPhones, TVs, electronics, across the board. I haven't heard an explanation yet of the actual details, how any of that plays out. You know, are the next generation of workers going to be factory workers if the factories are coming back to America? I ask these questions honestly because my brain can't get to the next level. It's very simple when you just utter catchphrases. of we'll make it fair, we'll bring all the jobs back, but none of it computes, and that's what the market's saying. So I haven't heard a real reason when everybody starts talking about we'll bring the jobs back of what jobs are coming back, what wages those jobs are going to incorporate, and how those wages are going to factor into the cost of production. That's the part that is most perplexing, I think, when you go forward to that debate. Bring the jobs back and reduce the trade deficits. What does that mean, ACAS? What does that mean? Bring the jobs back. What jobs? What are they going to be paying? Who's going to be paying for those products? What jobs should we start paying American wages for American consumers? Yeah. It's a real conversation, folks, and nobody's really having the difficult conversation of how any of it plays out before that. We're going to find out, baby. All right. So we talk a little Fed. Well, traders, yeah, they're anticipating maybe the Fed comes to the rescue. I'm not so sure on this one yet. I'm sure Chairman Powell's watching things actively. What is interesting, you're going to see a lot today that the Fed has a closed board meeting going on today. And this was a scheduled meeting, folks, okay? This was a scheduled meeting. Doesn't mean that they won't do something that was unscheduled. Okay, they're meeting and the sky is falling. Okay, it's possible, of course, but it was a scheduled meeting. So the closed board meeting going on today, okay, is a closed board meeting that was set today. So yes, there's a possibility, but I wouldn't look too dramatically. And yeah, circuit breakers. A lot of talk about circuit breakers. Now on Friday, what was interesting was, even myself, right? So here's the kicker about circuit breakers. 7%, 13%, and 20%. Going over them real quick. Doesn't look like we'll be there as of yet, but boy, we're almost there in the overnight session. We've been flirting with these numbers on a couple days in the last week. 7% is where the first circuit breaker occurs, okay? Trading is halted for 15 minutes, and that's if it's before 3:25 p.m. Eastern Time. Something to keep in mind is when the market starts to run, if it's running in the last half hour of the day, the circuit breakers don't apply, okay? They only apply in the last 35 minutes of trading if you hit 20%, okay? If you hit that number after 7, even if you hit the 7, and you're at 13%, doesn't stop after 3:25, okay? The only time it stops in the last 35 minutes of trading is if you hit 20%. So all the others, you stop for 15 minutes when you hit 7%, you stop for 15 minutes when you hit 13%, and if you hit 20%, it's done for the remainder of the day no matter what. Can't open it back up, market goes down 20%. So keep that in mind, but things get especially dicey. Yeah, especially dicey if you get into that last 35 minutes of trading, and especially if you're flirting with 7% or flirting with 13. As you get into that number, there's room to run in that last 35 minutes. Nonetheless, we'll see where we go from here. We talk about the Fed. How about 5? Yeah, how about 5 cuts is what they might be thinking for the Fed right now in terms of where you go by the end of the year. That seems a bit aggressive, in my opinion, but that's where the market is. And, maybe that's where it's going to be. You jump over the CME FedWatch tool, and yeah, where were we? A month ago on March 7th? On March 7th, the market was thinking that by December, maybe it would be at 3.5 to 3.75%. Okay, that's shifted a bit, but you can see the skew to the downside. There's now a 7% probability that we're all the way down at 2.75% by the end of the year. 3 to 3.25 is where the market's looking for right now. I think some of the questions I ask in terms of the price pressures, okay, and that's one of the things that's so difficult to make these types of changes, right? In terms of the type of changes that are being talked about need clarity. That's the one thing that's very difficult. To make those types of changes, you need real clarity going forward. And it's difficult how we get anything like clarity no matter what gets positioned right now. Whether you're talking about Vietnam, whether you're talking about China, right, across the board. and you jump to articles like, we get the good and the bad, right? Last night we had headlines for Vietnam that were great. Today you have Navarro saying Vietnam 0% tariff offer is not enough. For people who are proponents of what is going on, where is the clarity, right? You think we're going to make deals with everybody and it's going to be over and there's never going to be another negotiation? I'm being real. I can't anticipate a day where the president right now says, we've got a deal, we're never going back on it, we're good. That's the type of clarity that companies are going to need to make capital infrastructure change. That's the toughest part about what I envision, where we are going forward. I can't see that type of clarity no matter what happens right now. And yeah, devil's always in the details. I get it. But there's always going to be details to haggle over. Why not? You win one negotiation, why not start the next one? Where does the market go from there? We're coming back for the opening bell. Don't go away, folks.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have markets open. We kick things off with the NASDAQ 100 off by 3.6%, 628 points on the negative, 16,902. S&P's off by 3.5% right now. You get the Dow off 1,200 points, 3.1%. The Russell off by 4.4% to 1760. How about crude? Whew. Crude, we had a 58 handle. Yeah, we're making new recent lows, $60.27, a decisive break against that lower price level that had been holding for some time. Gold pairs the losses last night. We hit 29.85. We're trading right now positive by $5 in the session at 3,040 in the gold contract. We check in on the VIX, sitting at 50.35 in the volatility index, and we check back in on yields as we got the 10-year just above 4% right now at 4.03, pulling up that yield. 4.03, the yield on the 10-year trading at 113. Now, you jump over, that's the 10-year, ZN. You jump over the 2-year, okay? You jump over the 2-year right now. You get the 2-year. We spike all the way to 104.25. The 2-year now is at 3.62. Okay, 3.62 is the yield on the 2-year, and we've had quite a spike. And here, just to give you a map on this is what the 2-year has done recently, folks. And the 2-year, is heavily dependent on what the market thinks the Fed is going to do. You don't have to go back far. The 2-year was at 4% on March 27th. 40 basis points. In the last 10 days or so, the market has added 2 cuts almost, right? Remarkable. And hey, the market's never wrong. So pay attention to the 2-year if you're looking for the Fed. And there's the article in terms of what we're looking at. Traders add to bets on 2025 Fed cuts with risk of emergency move. Okay, now, as I stated, that meeting that they had scheduled, that they're having today, that was a scheduled meeting. Doesn't mean they might not use it as an opportunity to step in. How about a 40% chance, okay, this is what swaps are pricing in, that the central bank will lower its benchmark rate by next week. Forget about waiting until May 7th. We almost a 50-50 shot that swaps are pricing in by next week. Now, here's what I'll say on top of this one. The market's pricing in a lot of possibilities right now. When you got a VIX spiking to 60, you're giving yourself room for lots of possibilities, okay? That goes hand in hand with when you're talking about interest rates, you're looking at swaps. Just because it's factoring in that risk level, something to consider that it's factoring in a lot of possibilities because everything is so haywire right now, okay? And there has been a flight to safety. Yeah, you better believe it, man. The 2-year, among the most sensitive, fellows, men, is 22 basis points, 3.43. We bounced a bit, okay? But yeah. And this is, okay, Treasury volatility, but I want to get into the cuts first. Here we go. This is the one I want to talk about. This is basis points in Fed moves in December. Okay, so this is how many cuts are priced in for this year. You had about 3 cuts priced in before the carnage began last Wednesday, and we now have 5 cuts priced in. The market may lead the Fed here. As much as the Fed wants to fight, we'll see what happens. The one thing that's going to be a problem is going to be the potential inflationary forces that the Fed is wary of. Okay? That's going to be part of the component that makes it difficult for them to cut if those inflationary forces are playing out. Now, at a time when we just had the S&Ps drop by 20% in 6 weeks, okay? Yeah, 20% in 6 weeks. Well, more and more comes on the table for the Fed when you get a decline like that of 20% in 6 weeks. So we'll see where we go. All right, we jump over to Google this morning. Google shares off by 2.7%. We're going to talk about them in a moment, talking about searches. We jump over to Amazon, off by 3.3%. Apple, the big dog, off by 6.2%. Are they the big dog anymore? I don't think so, right? They're not going to be the big dog anymore. Market cap, $2.6 trillion for Apple. Where are these companies lining up right now? Amazon shares, 1.7. Microsoft right on the heels now, 2.6 about. So you got Apple at 2.67, Microsoft at 2.585, NVIDIA shares, you talk about a wipeout, man. 2.1. Now, yeah, that's quite a number, but my goodness, right? From 53 down to 88, it's a $65 hit. Is that a 45% hit on NVIDIA shares in exactly 3 months? The high made January 7th. You pull back. We're at 87.98 right now. Let's go a little big picture on the video. All right, we're at the 618 from this run that we had began in January of 2024. You break below here, you're probably going back to $50. Let's go even longer term. Yeah, you break before this little consolidation area at your 618, you're probably going to $45, $50 on NVIDIA shares. S&P's off by 200. We get a little bit of an acceleration. You know, these numbers in both directions are bonkers. That's a technical term, folks. Bonkers. You know, and I love the activity in the den last night. It was great. I was pulling up the futures, right? Anybody who was watching this market was pulling up the futures at 6 o'clock, and especially when those futures were down like 5%. We're in the den. Folks, if you haven't checked out the Tiger's Den, folks, go in there, check it out. It's $1 to make sure we just verify your identity, so we're keeping the riffraff and the spammers out of there, because, boy, this is a trader's market, okay? We got volatility everywhere, no matter what side you are in this market, folks. Use some stops, protect yourself. You know, rightfully so. The discussion last night was, man, right? We were down at a low of 48.50, and just like that, the S&Ps went up 150 points from 6 to 9 o'clock. Right? And then the numbers this morning, how far up we were off the lows. Well, folks, the S&P's just dropped 140 points from where we were at 6:30 this morning. It goes in both directions right now. Okay? NASDAQ 100, we were down at 16,450. You traded up 800 points from low to high. Now, the NASDAQ 100 is down 4.1% right now. And since futures opened last night, we had an 800-point rally in between, and we're still down by 4%. If anything, folks, there is massive volatility in both directions. Let's see where Tesla's opening. Down 7.7%. We hit 208. We're trading at 220 right now. JP Morgan off 2.7% right now. Bank of America off by 1.1%. JetBlue down by 7%. And yeah, we got the airlines and we got earnings season. And I'm not sure what to expect from earnings. This is probably going to be one of those scenarios, folks. And there's going to be some nuance, right? They're going to need, these earnings calls. Can you imagine these CEOs having to answer? It was almost like, do you remember in COVID where everybody pulled their forecasts? Going to be interesting to see what happens with these companies when they tell you how difficult it's going to be to forecast and what the market reaction is to that. We start finding out at the end of this week. Markets trading lower on the open. We got S&Ps 48.92. We still got a lot to talk about. Don't go away, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks, and we got a sell-off going on from the open. S&Ps, what were we trading at? We're above 5,000 at the start of the program. We just dropped 130 points, both directions, man. Dicey area, though. We're coming into the overnight lows right now. S&Ps, as I went over, off by 4.5%. NASDAQ 100, 4.6%. Dow, off by 4.3%. And the Russell, off by more than 5% right now at 1746. So, we get banks kicking things off. And you're going to hear from Mr. Diamond. And he's not a fan. Not surprising, okay? Likely boost prices, domestic, imported goods, way down the U.S. economy. He's not so sure about a soft landing, all right? And so what I struggle with, and it's a great point, EKS, I love the conversation, right? So where do the jobs come back to, folks, right? If we do factories, maybe they're all tech jobs. Are they all tech jobs? That's kind of the point. They're all going to be, we'll be a net exporter. All the jobs are going to be tech jobs. They're going to fix robots and AI. Are the people that are being hurt are tech employees? Are people who are savvy enough to run AI plants in America? Is that where we need jobs? Because I remember the auto worker being at the podium saying he wants to build cars in Detroit. Is he going to be the technology worker, that employee that stood up at the podium on Liberation Day? That's not going to solve the problems that this administration says it's going to solve with. Is everybody going to be a tech worker in an AI factory? That's the plan. That's the reaction. That's the plan. I mean, it's an argument. All right, it's a reasonable argument. I guess we'll see who plays out, but that's the argument. We're going to bring back every single factory to America, and everybody's going to be a tech worker that monitors and fixes robots in the factory. That was a reply. If that's the case, yeah. And then a lot of service jobs. We are a service economy right now. That's what we are. We're a technology and service economy. So, again, light on details. Now, I appreciate, but I don't see how that plays out. So this is all to make sure that we have all tech workers running AI plants. Now, we talk about clarity, okay? Back to Vietnam. Because this is going to be the wary nature of everything going forward, all right? You get a love-hate relationship, and this is something to be wary of in terms of even Vietnam going to 0%. And this is where the devil's always in the details of anything, folks, okay? Difficult conversations, full of nuance, etc., okay? And yeah, you're rightfully so. There's a lot that can take place, and what Navarro's saying in here is it's the non-tariff cheating that matters. Okay, so wait a second. We're not talking about tariffs anymore, right? Do you see how the conversation shifts? Oh, we're not talking about tariffs. Oh, 0% tariffs? Wait, what happened to reciprocal tariffs? Devil's in the details. Tariffs aren't all that matters, right? And you have to talk about market forces like this, folks, when you're in the market, okay? You get plenty of action here with people saying, oh, you're talking about politics. Folks, these are policy changes. This isn't a technical, am I supposed to talk about why the S&P is technically trading into 4,800 without addressing, the elephant in the room of why we just wiped out 20% of trading and just went back to prices that we saw in 2021 without talking about, anything of the reality of what's going on? That's not how it works, folks, okay? You can do both. You can do both and have a perspective of both. And I'm not sure why it's political. I'm really not. It didn't used to be political. Protectionist policies did not used to be political. And so I encourage you to keep an open mind as you look at what is happening here and where we go. Yeah. Because I don't understand how any of this plays out for future generations' jobs. But you look to Vietnam again, okay? Our tariff level is 46%, I believe. Is that the number they put on Vietnam? And here's, there'll be many articles written, all right? I think it's 46%. Is that the number? I want to make sure I got it right. Yeah, a 46% tariff, okay? Vietnam exports about 30% of the country's total exports to the U.S., okay? Vietnam's tariff rate is nothing close to the 46% we are charging it, okay? And I think they put in down here, maybe it's close to 9%. Let's see. When you factor in. And so it's going to be about a lot more than tariffs. That's not a reciprocal tariff, all right? That's what is the main goal there? Now they're talking about whether you're allowing China to run through there. Okay, there's a lot at stake. But it's one tale of what other countries are going to be watching, okay? Vietnam said they'd go to 0% tariffs. That's not enough. Where do you go from there, right? It's going to be a constant battle, and that is very difficult for the market to gain any level of certainty. That's what I find myself thinking about. All right, let's jump to Google shares. We'll talk a little equities. Google off by 2.5% right now, off $3.62%. And where is the headline? This one's going to be. And we have... because this one's an interesting one, talking about small businesses. Here we go. So if you're familiar with using Google, you've noticed recently that it's got a little AI feature at the top, right? Almost in the same way. I mean, check out this Bloomberg article that Bloomberg has a takeaway feature, right? Where basically they're giving you some bullet points by Bloomberg AI of what this article is talking about, okay? In the same way, you have small business owners, okay, that are now not getting any links because people used to Google search something and then click on it. And there's nothing wrong with this, man. This is just where the world is going, okay? AI-generated answers have caused traffic to independent websites to plummet. You got publishers out there. You have content creators out there. Many of the publishers said they have either shut down or reinvent distribution strategies. Now, that could be taking place with Google as well, folks, because it is intriguing how often I use ChatGPT, okay? And there's tons of great ones out there. I always get great feedback in the den in terms of what to use. But it's game changers everywhere. That's all that I took from this article, okay? It is in the super early stages, evolving search, okay? But you're going to see it play out in terms of what businesses. Now, there was a great interview with 60 Minutes with the creator of Yelp years back. And they had said even years ago, this is going back like 5-10 years ago, that Google controlled so much of the own search themselves that Yelp would not be able to be created in this day and age because of the way that Google was funneling everybody to their own services as opposed to just funneling your search to the variety of platforms that may occur. You're going to see differences like that everywhere in this market as you play out, I think. And yeah, intriguing to see, though. Not only is it Google, it's the companies that rely on those Google searches, right? The companies that rely on Google searches, they're getting pummeled because AI is answering everything and you don't need to click on links to go anywhere else. All right, folks, markets catching a bid from the lows. We got the NASDAQ 100 approaching 17,000. We got the S&Ps off by 3.4%. One more segment, folks. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got a rally. 100 points, 150 down, 100 up. We got the S&Ps catching a bid. We're down by 2.7%. But, yeah, we just rallied from 48.67 and, yeah, about 100 points, just like that in the last 15 minutes in the S&Ps. Fast fingers on days like today, folks. We're coming back to the pre-market highs. We had NASDAQ 100 off by 2.4%. Dow off by about 3% right now. Jump back to the dollar, just above 103 right now. We check back on yields. Get a little bit of higher yield coming at you with lower price at 112.24. And we check back on the VIX, still above 50. All right, let's talk a little bit of hockey and Mr. Ovechkin. You talk about it, folks. So, Ovechkin, he beats Gretzky's record last night, 895 goals in his NHL career. It's very hard to score goals in the NHL, folks. Not sure if you're aware. Very hard to score goals in the NHL. What's so remarkable here is the parity on the goal front that he and Gretzky came into. He literally ties Gretzky in one less game, and he beats him in the same amount of games. He led the NHL in goals 9 times, okay? The most he ever had was 65 in a season versus Gretzky having 92 at one point. 20 goal seasons, though, he's had 20 of them. 20 of them. just the consistency is remarkable. Now, we love statistics, okay? And check out this. So first you look at Ovechkin. The assists are something else, okay? If you know hockey, folks, Gretzky's the great one. Ovechkin is the goal king. Now, Ovechkin, check this out too. A plus-minus on his career is only at 62. I say only at 62 because look at Gretzky, man. A plus-minus of 520. Gretzky, almost the same amount of goals, one shy. He's got 1,963 assists. Ovechkin at 724. But how about just the plus-minus? Take out this season alone, and Ovechkin's only at a 45 plus-minus. Gretzky is at 520 plus-minus. Man, the great one, Gretzky, but today, Ovechkin. How about it? We'll end on that one. Markets catching a bid. All right, NASDAQ 100 off by 2%. S&P's off by 125. Thanks so much, folks. We got live programming. Basil Chapman coming up.